You're sitting at your favorite spot with a coffee in hand, scrolling through your phone. Suddenly, you see news headlines like "Tech stocks rally" or "Dow drops 200 points." You pause for a second, wondering, what does all this even mean? Should I be worried or excited? Stock market news can feel like a foreign language. For beginners, terms like stocks, shares, and dividends can seem intimidating. But here's the good news. You don't need to be a financial expert to start investing. By the end of this video, you'll know everything you need to confidently dip your toes into the stock market, even if you're just starting out. Welcome to Stock Market Investing 101, where we break down the basics in simple, clear terms. Ready to learn how you can start building your wealth one stock at a time? Let's dive in. So what exactly is the stock market? Think of it as a giant marketplace where people buy and sell pieces of companies. These pieces are called stocks or shares, and owning a share means owning a small part of that company. When you invest in the stock market, you're essentially becoming a part owner of a business. If the company grows and does well, your share, your tiny piece of the company, can increase in value. And it's not just about making a profit. When a company issues stock, they're raising money to grow their business, whether that's launching new products, expanding into new markets, or hiring more people. In simple terms, the stock market is a place where companies and investors like you meet. Companies offer shares to raise money, and investors buy those shares to grow their wealth. Now, you might be wondering, why bother investing in stocks at all? Can't you just put your money in a savings account and call it a day? Well, here's the thing. Keeping your money in a bank might feel safe, but it's not going to make you rich. In fact, with interest rates as low as they are, your savings are probably earning next to nothing. On the flip side, investing in the stock market has historically provided much higher returns than savings accounts, bonds, or even real estate. Over the long term, the stock market has averaged around a 7% annual return. But it's not just about making more money. Stocks can also protect you against inflation, that slow, sneaky increase in the cost of living that eats away at your savings over time. While prices for things like groceries, gas, and rent go up, well-chosen stocks can help your money grow faster than inflation. By investing in stocks, you're putting your money to work, growing it over time, and staying ahead of inflation. And that's one of the smartest moves you can make for your financial future. Alright, so we know why investing is a good idea, but how does the stock market actually work? The stock market is made up of exchanges, like the New York Stock Exchange or Nasdaq. These are platforms where stocks from different companies are bought and sold. But don't worry, you don't have to physically go to Wall Street to trade stocks. Everything happens online. You can buy and sell stocks from your phone or computer through a brokerage account. Here's how it works. When you want to buy a stock, you place an order through your brokerage. The exchange matches your order with someone looking to sell, and once the trade is made, bam, you now own a piece of that company. Stock prices fluctuate based on supply and demand. When more people want to buy a stock, its price goes up. When more people want to sell, its price drops. Simple enough, right? Let's talk about the different types of stocks, because not all stocks are created equal. As a beginner, it's important to know what's out there and what might be the best fit for your investment style. Blue chip stocks. These are shares in large, well-established companies with a track record of stability and consistent performance. Think of companies like Apple, Microsoft, or Coca-Cola. They're generally safer, but don't expect them to double in value overnight. Growth stocks. Growth stocks are companies that are expanding quickly, reinvesting their profits to grow even more. While there is potential for higher returns, these stocks are riskier because they're often tied to newer companies or emerging markets. Dividend stocks. Dividend-paying stocks are a favorite for those who want a steady income. These companies share a portion of their profits with shareholders through regular dividend payments. They're a great way to generate passive income while still benefiting from potential stock price growth. Penny stocks. These are stocks that trade for less than $5 per share. They might seem tempting because of their low price, but be cautious. They can be highly speculative and risky. As a beginner, it's often wise to start with blue chip or dividend stocks. These offer a good mix of safety and potential growth. Okay, now that we've covered the basics, how do you actually get started? Here's a simple step-by-step guide to help you make your first stock investment. Step 1. Open a brokerage account. You'll need an online brokerage account to buy and sell stocks. Platforms like Robinhood, E-Trade, or Fidelity make it easy to get started. Most brokerages don't require a minimum deposit, so you can begin with as little as $50 or $100. Step 2. Set your budget. The golden rule of investing. Don't invest money you can't afford to lose. The stock market has its ups and downs, so it's crucial to only invest what you're comfortable risking. Step 3. Do your research. Before buying any stock, do some research. Look at the company's financial health, business model, and growth prospects. Don't worry. Many brokerages offer tools to help you analyze stocks right on their platform. Step 4. Start small and diversify. Don't put all your eggs in one basket. Spread your investments across different companies and industries to reduce your risk. You don't need to go all in on a single stock. Start small and build a diversified portfolio. Step 5. Stay consistent and think long-term. The stock market is a long game. Sure, you might hear stories of people making a quick fortune, but the reality is that successful investing usually takes time. Be patient, stay consistent, and think long-term. Let's talk about risks because the stock market isn't a guaranteed way to make money. Prices can be volatile, going up and down based on market conditions, company performance, or even world events. While it's true that stocks can provide high returns over the long term, they also come with short-term risks. A company's stock might drop if it reports lower than expected earnings, or the market as a whole could crash during an economic downturn. The key to managing risk? Diversify your portfolio and avoid putting all your money in one stock. And remember, never invest money you can't afford to lose. As a newbie investor, it's easy to make mistakes. But don't worry, we've got you covered. Here are some of the most common mistakes beginners make and how you can avoid them. Trying to time the market. No one can perfectly predict when the market will rise or fall. Instead of trying to time your buys and sells, focus on investing regularly over time. Letting emotions drive decisions. It's easy to panic when stock prices drop or get too excited when they rise. But emotional investing often leads to bad decisions. Stick to your strategy and avoid reacting to short-term market swings. Neglecting research. Investing blindly without doing your homework is a recipe for disaster. Take the time to research companies before buying their stock. Remember, stock market investing is a journey, not a sprint. With a little knowledge, patience, and a solid strategy, you'll be well on your way to building wealth. Congratulations! You've made it to the end of Stock Market Investing 101. By now, you've got a solid understanding of what the stock market is, how it works, and how you can get started as a beginner. Remember, the key to success is consistency, patience, and a willingness to learn. Start small, diversify, and think long-term. With time, your investments can grow into something much bigger than you ever imagined. So, what are you waiting for? It's time to take control of your financial future. Happy investing! Don't forget to hit the subscribe button and leave a comment below if you have any questions. Let's grow your wealth together.